This is David Patrick, Fitzstock Charts, a market video update for February 20th, 2019. We're in a 31-day uptrend. This is when you make your money. We're going to look at the 2001 historical chart pattern comparison, which we've hit it out of the park with. And yes, we will eventually diverge from that pattern, and we'll scan for different patterns when we do diverge. But right now, we're looking for 2,800, 2,850, 2,900 because we're not going to pick the top. We're going to ride the trend with stops. I say it every day, say it every week, and I'm going to continue to say it until your head spins because you have to get it through your trading mentality of ignore all the noise out there. There's so much noise, whether it's media, Twitter, someone's opinion. It's so easy to get distracted on just simple things. Simple things are trend, price pattern, rules of engagement. Those are the simple things. Incorporate that with the historical chart pattern comparisons, and we get the 90% club growing to astronomical levels. 52 different options of January, February, March contracts just in 2019. They're up over 90%. Some are up 200, 300, 400%. 15 triplers, 995 different options that are up over 90% since we launched the service. Unheard of statistics, simple methodology. It works. Don't overthink things. Don't over-examine things. Just use the methodologies. Do you have to sometimes fine-tweak the methodology to meet your risk profile, your trading time horizon? Yes. Right? Some people shouldn't even be up on Twitter. Twitter is more for updates, day trades, aggressive things. Swing traders, real simple. They open up their emails. They see the charts. They see the ESFL. They know what to trade. They know our rules of engagement. They know our scaling method. And if they check in on Twitter once in a while, that's fine. But yes, everyone's different. So the methodology is going to work on whether you're a swing trader, a day trader, a hybrid trader. It's proven. Even if you're unable to scale, which I think is an important part of the methodology, just think if you are unable to scale up 1 and up 2% and you had your full size on when these things are up 260%. I don't necessarily, I think that's that you need to do that because the scaling part is so important to reduce risk. But I've seen a lot of good traders hit trades out of the park using these rules of engagement who are unable to scale at the quick levels that we do and just hold things. And if that's how you have to fine tweak it to meet your risk profile, your trading time horizon, that you're unable to scale when we scale, then it is what it is. Then you just have more patience with your trade. But give your trade room to work. Use the ESFL stop. Okay, let's get right into the market here. This is the Dow Jones 2001 historical chart pattern comparison. And we're in this elongated rectangle. And at some point, and we don't have to, because about 31 days into this trend, guess what? This thing re-blew up. And I do think, even though this is the Dow Diamonds, not the SPX, I think we're going to 2,800, 2,850, and possibly 2,900. I do think there's one more, at least one more shoot up. The only question is do you pull back slightly before you go higher? Just like you did here. I don't know the answer to that, and you don't either. So that's why we stay long. We add on price strength confirmation like I did last week. It's so important to do that. All right, let's change a couple things here. Why is that not working? There we go. And we got the daily, and let's change it to the SPX. See what we got. All right, so we have this crazy witch hat bottom. Early in the year, we got knocked out of trend. We came right back in. And then we basically grinded higher for 31 days, 31 trading days. And we've been in this trend since January 4th. It's 6 weeks. That's crazy. Imagine, though, if you pick the top and you say, yeah, we already got a run. We're still in a bear market. And imagine if you went cash here and you didn't just stay long with the trend. That's why it's so important to stay long with the trend and not to pick a top. So I mentioned we do have some gaps up here. I'm not sure if you can see them, but there's a gap right here. There's a gap right here. And I do think we get into these gaps, and I do think we could get in or close to up to 2,900. When that happens, whether it's this week, next week, or the following week, I would have to say within the next month, I think we're going there. And that's why I think it's important. If we're able to get another 4% of this rally, that's 12% with triple longs. That's amazing returns. And it's very important that you stay long versus your stops. NASDAQ, same thing. It ran into a little trouble at the 200 and just continues to grind higher. We got magnets all the way up to 2,100, possibly even 8,000 in the NASDAQ. Once again, we're not going to pick the top. We're just going to ride it. IWM continues higher, continues to lead. IYT, same thing. XLE, I put on ERX last week, continues to pay. I said that I felt that it was going to go into this gray box, and that's exactly what's happening. So congrats if you took that trade. XLF, and I think we get back to 27 pretty easy. IBB, starting to pause a little bit at this level right here. I think you get up to 115 to 120 eventually in the IBB. We'll look at some stocks that are leading that sector. Gold looks phenomenal. We had this WV bottom in gold. It paid a lot of different entries with gold and gold stocks in this area. Price strength confirmation probably 3 different times, and it's another price strength confirmation again. You're coming into a gap. It could pause up to 128. Don't pick the top. Gold looks really good. TLT bonds. We mentioned that on this pullback, we could possibly get down to 118 or even fill the gap before we go higher. I don't know that's going to happen. We saw the golden cross, and I do think dips are going to get bought, and I still like bonds. So I like gold, I like bonds, and I like the stock market equities because I think the S&P looks still great. Let's go into the stocks. Apple. I'm long Apple. We got some sort of elongated bull flag. I still think we're getting a 180. It doesn't matter what I think. And the stops are in. And I think you can add above this 175.57, 175.57 is price strength confirmation. Should get you to 180 to 185 area. And you got some gaps in here that might stall. But this stock, we looked at the historical chart pattern comparison in 2008. It had a nice bottoming process. And once we got above the 50 SMA, we had a nice rip. And we've consolidated. We've digested huge gains. And now it's just another test on whether this stock wants to re-break out and reconfirm or not, and we'll just have to wait and see. Amazon grinding nowhere. Google, I believe, is the same thing. Not a lot of leadership there. Netflix engaged the other day, I think off. Wait, that's not Netflix. I'm like, whoa, it does not look good. Netflix engaged the other day off the SFL, and we were able to scale that. MACD's trying to cross its grinding. And I think you get to 387, possibly fill this gap back here to 400. Yeah, I guess that's the new theme, really, is these gap fills. We've seen back 3, 4, 5 months ago, a lot of these stocks have some magnets above that they're looking to fill. Booking right there, that magnet still has let's call it 2,100. I think it could be a grind back up there. Looks okay, really not leading. Tesla's certainly not leading. Roku has been leading. And, talk about gap magnet. We talked about this, right? Just grinding up to fill that gap. And that's in the 90% club and then some. And that was we hit it out of the park with that one. We talked about bottoming processes this year with NVIDIA, Facebook, and Apple. And, of course, NVIDIA's not coming up now. A little lag there. So, we're coming in. I think above here you can get NVIDIA long or add long, 163.87. I think that's what it is. 163.87. And then you got another gap magnet. It's the 4th or 5th or 6th or 7th or 8th chart that we're looking at that has those gap magnets above. Intel, bull flag above the 200 SMA, still looks pretty good. Texas Instruments, Soxel, I'm long that. That's the Sox. Soxel is triple long. That one's paying fat. I'm not going to pick a top. It just looks good, and I'm going to let it keep paying me versus my stop. AMD looks okay. Micron. Let's see. My charts or my list fell down there. I think Avgo engaged and paid. That one looks pretty good. OLED grinding, and you have a gap right here. So I think you get to 130. Another gap. Imagine that. LITE, another gap up to 56, 57. So it's right our 10th or 11th stock chart looking for gap fill. This is a bull flag. 10 SMAs catching up. And what do we have? Another gap. 97, 98, 99, 100. That one looks higher. What about our Xilinx? It seems to get new highs every day. And yeah, you can add above 120, 50, and price target's still up at 130. Xilinx looks pretty good. I think Apple, Xilinx, some of these leaders, they look very good. Microsoft slowing down. Oracle is a leader. And look at this massive gap right back here. We come in this gap, and you're just pausing. And that's exactly what happens when you get into a gap fill. Adobe, slow, methodical. I think it wants new highs. Splunk did hit new highs and just sort of grinding up here. Coop, we're finally able to scale that one. Went up 1% from our engagement. It's sort of been lagging. Get the MACD bear cross, so it's hitting new high without MACD. You have the bearish divergence, so it's interesting. We'll see what happens. Remember, bearish divergence means nothing until what? Before we get to CRM. New highs on the SPX came in October. I went to cash, and we broke this uptrend line, right? Why? We broke an uptrend line. We had rules to engage short, and new highs came without MACD, so you had bearish divergence. Bearish divergence means nothing until you get knocked out of trend. So, although Coop is hitting new highs without MACD, it needs to probably break 93.37. That candle's low right there, 93.37. Then it could possibly be in trouble short term. So if you're long that name, maybe you raise your stop to that level, because then this would be a fake breakout. Now, in CRM, sort of just grinding. I don't see too much going on there. Let's see here. Workday, and then new high today without MACD, so you have some bearish divergence there. Jobs, not really showing us anything. FFIV, Team, SQ, don't see a whole lot going on there. What about Twitter? Snap grinding right at the 200 SMA, and I do think that's going to double digits still. So we'll see how long it takes to get there. BABA looks very good, and that it looks like price strength confirmation above here. Another bottoming process, double bottom, which is a W, and your shallow V here. And I think this will get back to 180, 200 pretty easy. And I think BABA is setting up for another long, and it's probably going to be on the ESFL soon. And Baidu also. I don't think Baidu looks just as good, but it looks pretty good. CYBR, bull flag, that looks like another ad above 105. That's our number one setup right there. Bull flag to new highs, price strength confirmation through the Fibonacci. That looks pretty good. Panwa looks good. VMW, new highs every day, looks good. eBay, new 6 months high, looks good. Vive, hit a new high the other day, is pausing a little bit. YY, NTES, Momo, Shop, new highs, and looks like it wants even more new highs. GoDaddy, Wix is at new highs. Well, it was at new highs there. It looks like we see a gap down on Monday. So, and this is interesting. They probably had earnings. That's why, and I don't have the earnings data on here. I'm assuming this is a gap down from earnings. But yeah, you hit new highs with MACD. Those were confirmed. I would be very, very surprised if this thing, would break this level. I have a feeling this ends up finding support down here at 105, 107 and reverses back up and starts filling the gap. And we're going to keep an eye on that Wix to see if that's just the case. JP Morgan, bull flag there, but there's just not a lot of momentum in banks yet. We talked last week that sector rotation might come into banks and back into energy. Certainly it's coming back into energy. Into banks, it's very slow. We'll see if some money pours back in here. But the bank sector looks very, very, very slow. Energy looks very promising. There's the ERX, and we've still got a ways to go here. So I think energy looks really good. Let's look at exchange stocks. Nope. We talked about, this one led last year. And is this a topping pattern? Is this a head, left shoulder, right shoulder? Possibly. Has this lagged all year? Yes. Did it lead all last year? And were we all over that? Yes. Can you short the stock? Does it have rules of engagement? Yes. Has it bear flagged below the 200 moving average? No. It's exactly what we talked about. Most likely is going to happen, and stops are going to get taken out here, and then probably this thing reverses. And then if it starts this kind of decline, it's going to reset up short. But yes, this is not a bullish setup. However, it's doing exactly what we thought it would do. Touch the 200 SMA. After it did there, it broke trend, went into a downtrend. You knew it's going to retest and probably break it, which is exactly what's happening. MACD's at new lows, new 52-week lows. So the price is confirming lower on CME. So the problem is we're in a 31-day uptrend. So you want to go ahead and short a stock, that's fine. You have your rules of engagement. That's not how I trade. I trade the trend. I trade longs when the market's in an uptrend. ICE, same thing, doesn't look good. CBOE, same thing, just struggling really to go anywhere. Let's look at the casinos. Win looks good, but it's got the 200 SMA, but it still has that very bullish WV pattern. Las Vegas Sands sort of grinding. MGM grinding. So I don't see a lot of momentum there. Let's get into these oils because this sector is exciting to me. Head, left shoulder, right shoulder, gap, gap, gap. Cop still looks very good. PSX, we still got that gray area that we think it can go to. Looks very good. CVX, yeah, that's a bull flag trying to break the 200 SMA. I think this thing gets to 125. Energy looks good. Exxon looks good. Diamond Offshore, improving. Rig, improving. Schlumberger looks very good. Still think this one wants $50. We'll see. Marathon, bull flag, that looks good. Oxy looks decent. So your XLE, your ERX, the oil sector, we're all over that. And we're getting paid. Amgen, let's go into the biotechs. They look a little sleepy. Guild, Jazz, ALXN. Now that one looks very good. It's seeing price strength confirmation, and we do have a leader here with the Alexion. So we'll see if that one ends up paying. Vertex, not too bad. MACD bull cross could be happening soon. Break of a downtrend line. I would say that one is probably the second best in that sector. ISRG, that one looks good. Those three all look good to lead that sector. Aluminum looks okay. REGN, pausing. If we see the MACD bull cross, that could be our fourth stock in that sector that might lead. WWW gap down, and that stock's not doing too much. CMG, you saw price strength confirmation. Now it's starting to come back down. It might break trend before it goes higher. These new highs were all confirmed with MACD. So I think we still go higher, but we could get knocked out of trend before we grind back the new highs. So that one is lagging right now. UBNT, new highs, and we're getting paid certainly on that one. Twillo, yeah, MACD bull cross, new highs on that one. X-Ray, broke trend, broke the 10 SMA. And this is what I wanted to see with this one. Come down here and test the moving average before higher. We still got this gap up here, 47.5 to 50. I think if this pause, we see a pause, refresh, that one could be setting up again. And Align Technologies, same thing. I'd like to see a pullback before we see that one on the ESFL. So what's going on in the market? So we're continuing to grind higher. It seems like we grind higher every single day. I know, don't short a market because you're bored. Don't short a market because you think that it's exhausted or overbought. There's going to be a pullback. It might happen today. It might happen in the afternoon tonight. It might happen tomorrow. It might happen the next day. And we might even get knocked out of trend like we saw in 2001. It's not about that. It's never been about that. It's always about riding the uptrends. We talk about it all the time. We get 2 to 3 good uptrends every year. Last year we were spoiled with 11. This year we're spoiled with having one that just goes on forever. You have to make your money. You can't pick a top in these uptrends. You have to ride them. Because I'm telling you, we're going to go at least 3 to 4 different times into no trend this year, if not more. And we're going to go to at least 2 downtrends this year, if not more. So if you're not making your money in uptrends, you're not riding this fully, you're going to struggle when it's harder to make money. Because it's easy to make money right now because the market's trending. All right? So understand that. Stay long versus your stop. That's all I have for the market video update. Have a great day.